Thank you for joining us at xm.com for this Forex preview video. I'm Cristina Marujos. Joining me today is Cristina Barcenido, investment analyst, and we'll be having a look at inflation data out of the Eurozone, which are expected on Friday. And expectations are for the number to rise to a 13-year high. What are we likely to see in the report? And could higher inflation raise any flags within the ECB?
Hi, Christina. That's right. Eurozone is not an exception. Inflation is soaring in the Eurozone, as in many other key economies, because of the supply shortages and other disruption in productions, which consequently press shipping costs and energy prices higher. We expect CPI inflation to continue its upward direction above 3% year on year, rising up to 3.3% in September. If true, that would be the highest since the previous financial crisis in 2008 and well above the 2% threshold, which was the previous inflation target for the ECB. Now, the core CPI measure, which excludes food and energy, is also expected to strengthen to 1.9% year on year. So we see that products other than the volatile ones are also facing upside inflation pressures, and perhaps the worst of inflation hasn't passed yet because demand for energy products is usually larger during the winter season. So if supply shortages persist in the coming months, inflation could rise even higher. The main question now is what the ECB would do in the case price growth continues to accelerate. So far, the ECB has been arguing that inflation is not getting out of hand and temporary factors are behind the spiral in prices, saying that monetary policy should remain accommodative to help recovery keep going, and therefore no plans for bond tapering are needed at the moment, and potential rate cut could come even later in the next decade, probably some period after the Fed starts to raise its own interest rates. Well, perhaps there's no convincing evidence yet that inflation is becoming more durable, but definitely another strong CPI inflation print would add more pressure to the central bank and raise some nervousness about whether inflation should be taken more seriously. We shouldn't forget that the ECB decided to slow the pace of its pandemic PEP purchases just a week after the headline CPI climbed to 3%. And besides the bright outlook for the Eurozone economy, that could be another sign that policymakers have become less supportive of a stimulative policy, although the slowdown in the PEP program is just an adjustment of the March increase and not an actual bond tapering action. Now, how could they react if CPI inflation continues its upward direction? Well, I believe that this could strengthen the debate about an early termination to the PEP program, which is originally scheduled to end in March. And perhaps since the case of an increase in the pre-COVID asset purchases program is still open for next year, some hawkish policymakers could raise red flags about the flexibility to boost asset purchases once the PEP program expires, or at least they could ask for stricter terms to be applied for this kind of purchases.
Now let's turn to the euro. How could it perform on the CPI release?
Well, inflation has become a hot topic these days, and investors are sensitive to any inflation updates, wondering how long the ECB could remain patient. So a stronger than expected CPI inflation could add pressure for a less stimulative monetary policy, likely helping the euro to gain some ground, but probably the reaction could become more powerful if hawkish ECB policymakers start to complain about inflation after the data come out and call for some tightening sooner than later. Now, if the data miss expectations, for example, if CPI falls below 3%, that could reduce the odds for any kind of tightening actions, likely worsening the sell-off in euro dollar. Probably the key support of 1.1663 will be in focus in this case, and the break at this point would resume the downtrend from May and therefore worsen the medium-term outlook in euro dollar.
Cristina, thank you so much for joining me today. This was a Forex preview on Eurozone CPI here at xm.com.